The issue is extremely topical, and this goes beyond sort of usual courtesy if I say that we are looking forward to conclusions of your suggestions, remarks. We are looking forward to the discussion that hopefully will make our job a little bit easier, the job of conducting monetary policy in a small, open economy after the crisis. And to be precise, it's a small, open economy that is fully integrated with the rest of, especially European economy, with one exception, which is the currency. We have a separate currency, but everything else is in common. That is why it's so difficult sometimes to conduct monetary policy especially in turbulent times. As a matter of fact, when I looked at the program, I'm quite excited by what our guest from National Bank of Denmark, Danish National Bank, can say, as the experience of Denmark could be of certain relevance for us. Well, let me reflect on a few issues that I'm sure that you will be discussing and that is of utmost importance to us. Let's start with the regime of inflation targeting. It served Poland quite well, in fact. But we have to look beyond our country and ask ourselves a question whether IT, inflation targeting, have served other countries or the global economy, or those countries that have either officially or in practice embarked on inflation targeting, whether this kind of monetary policy was correct. Well, one can say inflation targeting ignored or didn't cover asset prices. So basically it failed, or it was not entirely relevant to what we had, and the crisis came from asset prices bubbles. Well, further we can say, did monetary policy just contribute to the crisis, or, as some say, did it cause the crisis, or was it one of the main or the main cause behind the crisis? How important was the famous or infamous Greenspan put? Was it just one of the necessary but not sufficient causes of the crisis, or was it the main engine of the crisis? So, will inflation targeting survive the crisis? Will it be modified? And how? As I said, it served us well. It served us well in the past decade. It helped us stabilize not only price levels but also expectations, which was not easy in a country with such an inflationary record as Poland is. The version of inflation targeting that we had in Poland with flexible exchange rate is also quoted as one of the factors that helped us survive the crisis in reasonable shape. So for us, there is no reason to put inflation targeting in doubt, but this may not be the case with with experience of many other countries. Then the question is, how can we continue with this in a world where quantitative easing is the issue of the day, in the world when we suspect that inflation might be the way to get rid or at least attenuate the fiscal problems of advanced countries? How can we conduct in a usual way our monetary policy, knowing that financial integration of our country with the rest basically impairs the transmission mechanism of our monetary policy? What should we do? And the last question that, of course, will be debated here, as it is debated everywhere, is the link between monetary policy and financial stability policy or financial stability issue. Well, in fact, financial stability was part of the mandate of central banks almost everywhere, but we just didn't treat it too seriously. Now, the question is, well, when we look back to the Great Moderation, whether monetary policy could have prevented the crisis or could have made it less disruptive. I already mentioned the famous Greenspan put. But there are many that reflect the two dimensions of the mandate. Price stability and financial stability can conflict with each other in certain conditions, in certain moments. However, I must say I am very comfortable with the fact that financial stability becomes well-defined and prominent part of our mandate. In fact, it's the same with the fiscal policy. I sometimes say that you can only have a good fiscal policy in good times. In bad times, fiscal policy is always bad. But I mean, you can start good policy only in good times. Okay. The same goes with financial stability policy. If you treat instruments that you have or you don't have, that's the problem. In the early phase of the cycle, when the imbalances only start building up, then this can be a very helpful instrument that reinforces monetary policy. And we feel that we are in this phase of the cycle where the economy is growing, imbalances have not yet started to build up, and we can start using, which we are, instruments of microprudential, macroprudential. The instruments are the same, but of course we can use the instruments, the supervisory instruments, the regulatory and supervisory instruments at an early phase of the cycle, which I think makes monetary policy more efficient less costly, and the life of central bank, in fact, a little bit less uncomfortable. Well, I'm not pretending that I have raised most issues of substance, but these are the ones that concern us in our monetary policy making here in the bank, here in the National Bank of Poland. And if, which is certain, if we experience a good discussion here, then I hope this will be a very helpful event. Thank you very much.